Hey everyone, Matt Chart here. We're looking today at the US dollar. We're going to do a technical analysis on it since there's been some important developments technically on the US dollar index. Today is April 7th, 2011, and the first chart here is actually a long-term chart. It goes back 15 years on the US dollar. We can see that basically we had a nice run up leading up in the 90s to dollar, 121.29 on the index, and this was back in summer 2001. And basically we've been moving in this downwards trend here since then. These arrows don't necessarily mean anything. I'm just basically using them to show you the direction of the trend that has been taking place. So basically from 2001 to 2008, where we hit a low, basically we had about a 7-year downwards trend, and the low here was 70.70 on the index. So it's taken quite a tumble, had a lot of selling pressure. Now from here, what's basically happened is we've moved into a consolidation period. This is basically a temporary breather. It's taking a pause in the direction that we currently had, and it may either continue on the downwards trend, or we may get a reversal and we could break out and we could see a rally in the US dollar. So this is very important to determine the new direction that this index is going to take us. Now you can see some lines here and they're a little difficult to see, so what I'm going to do is actually show you a second chart, and we're going to zoom into the circled area so you can get a better understanding of what I'm going to show you next. So this is what we're looking at here. We've got resistance between 88, 89 on the index. You can see we've touched this level 3 times and failed to break out of it. If we were to break this resistance area, that would signal a breakout and an upwards, multi-year upwards trend in the US dollar. The last run lasted about 7 years, so we could possibly see another 7-year bull market in the US dollar if we were to break this red line. Looking at the support areas, you can see we've got this trend line here that's basically been building up, and you can see we've touched it 1, 2, 3, 4 times, and that confirms, at least 2 or 3 times confirms that a trend line is intact. So this isn't an actual trend line, sorry, this is a trend line, and it's actually a bullish type of a pattern. It's an ascending triangle. Our low points are getting higher and higher and higher, and generally gives a little bit more leverage to suggest that a breakout to the upside will occur. Now, it doesn't guarantee it, but it sometimes does suggest it. So what we've actually had, though, is a breakdown below our trend line, and that actually changes the pattern from bullish to bearish. So instead of having a breakout, we've actually failed the breakout attempt by breaking our support line. So at this point, since we've now broken below our trend support line, this is incredibly bearish for the US dollar. It's a very early sign. I'm not talking about a complete dollar collapse, but what I am suggesting is that we are going to see new renowned selling pressure on the US dollar, and we may start to see headlines in the news in the following months or years about worries over the US dollar, because certainly technically we're starting to see very early signs of a breakdown. Looking at the MACD, this is a momentum indicator. These are moving average lines, and they kind of give us nice little buy and sell signals whenever they cross over. We had a sell signal here, another buy signal here off the support. And what was interesting to see is this gave us an early warning sign. We were getting a sell signal on the support trend that was sort of suggesting that we were going to get a breakdown of this overall pattern, and certainly that indicator gave us a great signal, and now we're seeing a sell signal. So what we're going to see here is not a straight down move, but probably some sort of zigzag back to our support trend. So this is basically the support level that is going to get tested, and as we had upward pressure on the resistance area before, we're going to start to see downward pressure on the support, and this support line is going to need to hold. If we break below this, it's going to be the confirmation that the US dollar index is going to move into a new multi-year bear market with lots of selling pressure on it, and that is particularly bullish for things like commodities like oil, food, precious metals like gold and silver. So watch for rises in those sorts of things while the US dollar index continues to fall. So we don't yet have that confirmation, but there is early signs that we are getting a breakdown on the US dollar. So we could start to see what we should probably see is lower low points. So as you can see, we've got a low point here, and now we've got a new low point. We don't even have a rally yet We could continue down quite a bit further. 74.23 was the last low, so we may come and test this area. That may be a little bit of a support, but certainly it's not going to be as important as this one here. This is the big one. So if we take a look back at the long-term chart, you can see we've got this long down move and then the basically pause period, and this is basically going to tell us which direction we're going to move next. So is it going to be down or up? My bet now is certainly going to be down. Since we've failed to break out, we're going to start to see more selling pressure on the support, and as I mentioned, if that breaks, we're going to probably see new lows in the US dollar. So thank you very much for watching. I'm going to put a link at the bottom of the videos if you'd like to take another look at these charts, and certainly these do update live every day. You're welcome to check back and take a look anytime you like. Thanks very much for watching.